Hey there, it's Christmas Eve. I'm Drutter. This is going to be my year-end silver analysis video with some related data and charts. And to get the content out to you, I'm going to film my monitor, like I did on this channel up until fairly recently, because the screen capture software that I use is very time-consuming, and I would just like to focus on the material. So without further ado, let us begin. Wow, $14 silver. It was a sideways year for the most part, but technically it did make a fresh low on the US dollar chart anyway. Silver is 73% down from the 2011 top. And as we have said for a while now, this can't go on forever, but it did go another year. And here we are at 14. It has dipped below 14. We did see this year the mainstream finally acknowledge the electronic price of precious metals is now fully controlled by the big banks. So it's not a secret anymore that these prices are not real. There hasn't been a revolution. There hasn't even really been any commotion about it. But at least we can now say, without being called conspiracy theorists, because it is now a conspiracy fact, the price of gold and silver is controlled completely by the big banks. That's not hyperbole, that is literal fact. It is a corporate banking conspiracy against the people, and it's backed up by the government. They could set it to zero, or even below zero, like they have ridiculously now with interest rates in many places. There's no supply and demand forces allowed to act on this market. This isn't a physical metal market, but it is how we price physical metals. And if there's no supply and demand allowed to act on a market, that is not a free market by definition. And a market that is not a free market cannot be used for price discovery. Period. Continuing on with price discussion, here's a look at silver's price in Canadian dollars over the past 15 years starting in 2000. We know the US dollar's been really volatile this year, mostly in an upward direction, which is pushing the price of anything denominated in US dollars down. So the US silver chart is down further than it would be otherwise if the US dollar hadn't been doing so well this year. I guess they're just making so many US dollars that they're getting more and more valuable the more they make, but that's an aside. And we'll talk about the US dollar chart in a moment. For now, we can see silver in Canadian dollars is holding up at about $20 an ounce right now. The price of a maple hasn't dropped below $23 locally here in Vancouver since, well, since about here. As soon as we started lifting off in 2010, the price of maples were $23, $25 at that point, and we are currently about the same spot price as that point in time, and the same premium, about $3 to $4 on a maple. So you will pay about $23, $24 for a decent ounce of silver in Canada. And it has been that price or higher for the past 6 years now. This chart doesn't look as bearish as the US dollar chart does, especially going back to 2000. We see silver has been on an uptrend, a pretty stable uptrend, in fact, that entire time. These ups and downs, of course, happen in any market, and we have what happened in 2011 here, but it does look like it just has been a stable bullish market for the past 15 or more years in Canada and in a lot of other places. The US dollar chart really makes commodities look like they've turned a corner and are in a bear market since 2011, and that the bull market going back for decades is broken. I don't think it is. We might as well also look at gold. Here's gold in Canadian dollars, and that's even more pronounced. Gold is less volatile than silver, so when it has its ups, it's less up, and when it has its downs, it's less down. So this looks almost more like a straight line than silver's chart does, because there's just this little lump here at 2011, 2012, and 13, where it had that extra bull market, I guess you could say, but it is still in a bull market. At least it looks like it on the Canadian chart. I checked the Australian chart as well. It's almost exactly the same as the Canadian chart. So I've looked at a lot of different charts around the world. Gold's either at or near its all-time highs in almost all currencies. The US dollar is the only one, really, that's making all the charts look bad, and everyone around the world looks at the US dollar chart to see what commodities are doing. So commodities look like they're in a bear market right now, and they aren't. There's certainly an industrial recession going on. That's not hitting gold as much, it's hitting silver, and as you'll see in a second, it's hitting platinum. There's a platinum chart. This is in US dollars, so it looks even more bearish lately than it would otherwise because of the US dollar strength. But look, it's back to that same point it was during the crash of 2008. We know that platinum has a small monetary vector. It has been used and it is seen slightly as money through time and now. But platinum's really not money. You know what platinum really is? Platinum's an industrial metal right now. And industrial metals are heavily down right now. You can see it with platinum. It hasn't even recaptured that old high from back in 2007. That's the stock market crash in 2008. Just destroyed platinum. All the companies that use platinum and such all went under or went way down. And platinum took a major hit. Its production was about the same, but its demand was just plummeting. And I think that's what's happening now here too. And platinum's industrial vector is dragging it down into the mud. And that's the same thing that's happening with silver, because silver is both money and it's an industrial metal. The industrial vector is suffering badly right now. Back to that US dollar chart again. Here we are at $14. Silver suffering horribly in an industrial slump. Silver is still money? Yes, it is. But silver's monetary vector is not as strong as gold's, and that's not helping at all. The price has been pulled down 73%, like I said before, almost completely on silver's industrial demand plummeting. We can buy as many maples as we want, and as many eagles as we want, but we can't hold up the price completely on that alone, at least not yet. One more quick thing to say about the Canadian dollar chart. We are exactly at $20 where we were about 2.5 years ago when silver made its first initial, well, I guess its second fall from the $40 range, and silver is up from where it was a year ago. As for gold demand, I'm not going to go into it in depth here in this video, but on the US Mint's website you can see that gold was almost at its all-time high this year in terms of demand for gold eagles, and same thing with other mints around the world. Maples, almost a record or a record, and Krugerrands, same thing everywhere. Gold is in massive physical demand right now. I want to mention Bitcoin briefly. I talked about it, I think it was a few months ago when it was just on its way up past 300, and I said it looked like it was going up. It hit 500 and fell back again, and it now looks like it's about to recapture that 500 level. If it does do that, it probably will go to 700 or higher fairly quickly. And this could be the start of another major bull run. It looks like Bitcoin bottomed at about 200. It pierced below here briefly, but it spent all year at 200 or trying to break through it. It could never fall below 200 again. And finally it just decided to lift off, and now it's making new highs. So that could be the start of another bull market for Bitcoin. And I just wanted to make a slightly simplified version of this chart. Yeah? Yeah? What do you think? Is that about right? Yeah. That's the Bitcoin chart right there. Going back to when it was $6. And, well, let's just put that on a slightly bigger screen. There we go. So it can give you an idea of what might happen. Maybe. As for Bitcoin fundamentals, it's really about the same as before. It just continues to be used more and more as a legitimate currency, getting more and more recognition around the world. It still has not been fully regulated, controlled, or hacked. There's other stuff going on in the Bitcoin world right now. We're not going to get into it in this video, but it looks like Bitcoin is possibly on the way up. If you are the type of person who invests, and if Bitcoin is something that might interest you for investing, it's probably a good idea to take a quick look at that chart and the fundamentals for Bitcoin. I'll let you do your own research there. The US stock market is at or just under its all-time high right now, but that's been the case since 2009, so not really new. Moving on. Here's my simplified crude oil chart going back to 2000 also. Looks like we are at the same price, well, actually cheaper than it was in the 2008 collapse, which was supposedly never going to get to that price again. It is below that price now, and it is the same price that it was at the very beginning of the Iraq War. So when the US invaded Iraq in 2013, the price was the same price that it is now. I'm not an expert in oil. I'm not going to talk about the fundamentals. That's not my expertise at all. Looking at this chart, I'm just pointing out the US dollar is way up right now. That is making the oil chart look worse than it is, just like it's making silver and gold look worse than they are. But priced in US dollars, this chart looks like garbage. I remember Mike Maloney saying that he thought oil could get down to $10 or $20 US. He was absolutely right. It certainly could get down to $10 or $20 US. If we have another major stock crash or another recession even, that's what's going to happen. But I'm not going to say too much more about this chart, mostly just presenting it for your information. Unemployment figures, courtesy of Shadow Stats. I'll put their link down below. This is my simplified version of their chart. Blue is the real numbers, the way that unemployment has been calculated in the US forever, and red is the new way that the government has started to calculate unemployment to make it look better. As you can see, it's reading about 5%, whereas the real unemployment is about 23%. So things are actually about 4 or 5 times worse than the government is saying, and rather than getting better, as the government is saying, they are getting worse. There's not a lot to say about this slide other than holy shit. I keep mentioning it, so here is the US dollar index, going back about 2.5 years, and simplified of course. The US dollar index is a measure of the strength of the US dollar in relation to similar currencies like the Canadian dollar, the euro, and so forth. When the US dollar index goes up, things priced in US dollars get cheaper, and when the US dollar index goes down, things priced in US dollars seem to be getting more expensive. Over the past year and a half, the US dollar index has surged from about 70 all the way up to 100, causing the value of everything in the world denominated in US dollars to plummet by about 30 or more %. This, of course, is one reason why commodities look so bad lately, in addition to the economic slump that we're going through, which is dragging down commodity prices as well. Do not lose track of this chart. It looks like it could be about to take out that 100 high and head up into the, who knows, 120s, 130s or more. It has been there in the past. It certainly can go there again. And we are in unprecedented economic times, so look for unprecedented economic things to be happening. The US dollar index could double to 200, and everything in the world would half in price in US dollars. If somebody were to make a chart of the ratio between the price of gold and silver over, say, about 20 years, then this is what it would look like. The gold to silver ratio has been used for a long time to determine a lot of things, but for example, where in the metals cycle are we? Are we headed for higher prices or lower prices? Is that something you can tell from this? Sometimes. For example, when the gold to silver ratio is low, such as here in 98 or back here in 2006 or here in 2011, any of those times ring a bell? Yeah, that's the tops of precious metals markets, right there, right there, right there. Those are highs, at least locally. And these are lows in the precious metals market. The precious metals market was low in 2009, and it was also low in 2003, and it was also low in 2015 and 16. Could we be at the low for precious metals? Yes, but maybe it'll go down a little bit further. Maybe the gold to silver ratio needs to come to 80. It's only at 78 right now. Maybe it needs to go to 80 like it was here and here and here. Or maybe that's it. Maybe it's ready to come back down again. Maybe we're about to resume the bull market in precious metals. But this is an important indicator to look at. If you're not paying attention to the gold to silver ratio, then I recommend you do. I will mention it from time to time on this channel. Here's a tasty little graph that shows the global sources of silver demand, simplified of course, and it does show that industrial demand is about 50% or half of all demand for silver in the world. About half of it goes into industry. About the other half goes into what you could collectively call the people's hands, really. It's going into investment, that's bullion, coins, and bars and so forth, and jewelry, which also tends to end up in the hands of the people. So you could say that demand for silver is about half for the people and half for, well, industry, which ends up being for the people, but half really goes into industry, building stuff, solder, and wiring, electrical circuit boards, solar power, the list goes on, we've heard it before. So we know that industrial demand is down lately because, well, for one thing, China has an economy that is slowing down over the past year or more, and that may continue. So if industrial demand for silver goes down, the overall demand for silver will go down because industrial is half of all the demand for silver. So if we see another economic slump, yeah, we will probably see a decrease in silver prices and definitely in platinum prices because platinum is almost completely industrial. Gold, in that case, would probably hold up a little bit better as gold is not industrial really at all. It's almost completely investment and jewelry. Keep this graph in mind as we switch over to talking about demand for silver bullion. The broadest measure of investment silver bullion demand is the US Silver Eagle coin. This data from the US Mint's website shows a total of 47.0 million ounces of silver eagles sold during 2015. That's the highest number ever, and by a nice margin, beating last year's record total by 3 million eagles. 4 months this year saw all-time records for those months. And this all comes despite the Mint's closures for several weeks throughout the summer and fall, where no silver was available to mint the coins at all, and they were selling zero. There's no zero totals on any of these months because they managed to open up either at the beginning or the end of the month and sell some eagles, but a lot of these numbers could have been a lot higher, into the 7, 8, and 9 million eagles minted per month if the US Mint could keep up with demand. Nevertheless, we did end with 47 million. That's the highest total they've ever managed to pump out in a year, and we snapped them all up. Keep in mind, though, the United States only mines 38 million ounces of silver per year. Let that sink in. 38 million ounces are mined in the country per year. 47 million ounces of eagles are sold in the country in a year. But can all the silver that's mined in a country go into producing coins? Or even one specific type of coin? Of course not. Only about 3 million of those 38 million ounces can go into producing these silver eagle coins. Therefore, if the United States had 15 times as much silver in their reserve, and 15 times as much mine production as it does, it still wouldn't be meeting its own demand for physical silver. And it is a similar story up here in Canada. We've had shortages of physical silver bullion at many times throughout the year, including right now, and there is a record high demand and a record sale of silver maples. Here's the bar graph I've been updating and upgrading as I go, showing the 47 million for 2015 in relation to the past years. This notable dip here in 2012 was when the price dipped and demand also dipped. But as you remember, and as we will see in the divergence chart coming up next, that was the last time that price and demand ever correlated. And the graph that a lot of you have probably tuned in for, the graph of silver's price versus demand over the past 15 years. I've come up with a new way to show the price in blue. In the past I've used either high price or I've just put a chart, like superimposed a chart there. This year I've decided to use a low-high range in US dollars. So you'll see that spread between the top and the bottom. That's the price range during the year. The highest price it got to in the year will be here. The lowest price will be here. There's that 50 top in 2011, for example. And here we are now at $14 on the low end of 2015's numbers. I think I like doing it this way. I probably will continue. Give me your feedback if you like. It does show more data at a glance, and there's more accuracy in doing it this way. It also shows the volatility, the variation between the low and high prices, approximately the volatility of the metal's price during that year. So you can see it was very not volatile back here compared to what it is now. Historically, the demand for physical silver bullion followed the price, roughly. They were both flat here, and then both increasing here, up to the 2011 price spike at $50, pulling back together in 2012, but that changed in 2013 as the price broke away from a constantly rising physical demand. I noticed and documented this divergence, and myself and others have been tracking it ever since. As you can see, it has gotten incredibly wide, with silver's price down at 14 and the demand up here at 47 million ounces. It's never, ever been as wide as it is right now. History tells us that price and demand should meet again at some point. We don't know when, and we certainly don't know where on the chart that will be. Is demand inappropriately high and due for a collapse? Or is the electronic price, which we know to be manipulated, inappropriately low and due to correct upward or even be revalued completely? Obviously, my bet is on the price being what needs correcting, but this is only one tool to come to that conclusion. We each have to consider as much data and analysis as we can and make our own decisions. 2.5 years ago, when I first saw this happening, I had a hunch that it wasn't an anomaly, but a pattern that would deepen, and I was right. The Drutter divergence is one of the main topics I intend to focus on in depth in 2016, because the story is clearly far from over. Thank you very much for watching, and thank you for rating the video and for sharing it. I really appreciate that. Helps get the message out. I want to just take a moment to remember those people who are less fortunate than I am and than we are, because I'm not just talking about food and other things that we need to provide for people at this time of year. There are many people who are physically needy, but there are also people who are emotionally needy at this time of year, and it can be a very, very dark and traumatic time for people who don't have a family to spend time with, or they're apart from their children perhaps, or maybe their parent or siblings or other family members and loved ones for various reasons. It can be a very, very terrible time of year because as everyone gathers, and the music and the food and the friendship and everything, and they gather in pockets around our communities, there are people who are not invited to those things, and people who, for one reason or another, can't be with the ones that they want to celebrate with. So I just want to remember those people. Have a great, great Christmas, an excellent New Year, and I wish you all the best in 2016. I'm going to leave you with a little bit of music from a friend of mine called V-City. He produces excellent music, and he's put out this little Christmas jingle. I think it's great. And I'm going to put the charts up on the screen now in full resolution so you can check them out one more time. And thanks again for watching. Have a great Christmas.